Hello and welcome to People and Profit, where we look at how business shapes our world. I'm Marcus Carlson. Coming up, the Greek government puts its banks in the deep freeze. We look at what it means in the long term. Is Puerto Rico the Greece of America? Investors are getting nervous as the island warns it cannot pay back its $72 billion debts. Plus, streaming wars. We ask whether Apple could fall flat on its face as it muscles into the market for streaming music online. More on that later. First up, though, the Greek debt drama continues. But whatever happens in the short term, the dramatic decision to freeze the finance sector in Greece will be difficult to defrost. Capital controls have shut down the banks and limited cash withdrawals. The aim was to stop billions bleeding out of the lenders due to fears over the country's future in the Eurozone. But there's concern that the controls will leave a lasting scar on the economy. Let's start by taking a closer look at what the government has put in place.
A dramatic twist in Greece's five-year financial crisis after it was announced that capital controls would be imposed. The move was designed to spur the country's creditors to offer concessions on a €1.6 billion payment. So just what are capital controls? A directive released by the Greek Prime Minister on Monday outlined the key points. Daily cash withdrawals are capped at €60 at least until the 6th of July. Transfers to destination outside Greece are prohibited and require approval from a Ministry of Finance commission. And urgent business and medical transactions need the green light from a designated approval committee. Banks breaching the rules face fines of up to 10% of the transaction amount. With a number of cash machines already reported to have run out of bills and banks being closed for several days, the situation appears bleak. The move by Athens mirrors the one made by Cyprus in 2013. The government was forced to introduce similar capital controls after a banking crisis rocked the island nation. But looser restrictions saw cash withdrawals capped at €300 per day. It wasn't until April of this year that final restrictions were lifted.
Let's get more now on the wider implications of capital controls. We can turn to Christian Jimenez, founder and chief executive of the asset manager Diamant Bleu Gestion here in Paris. Welcome to the program, first of all.
Thank you, Marcus.
I want to start talking about the pros of capital controls. What is the interest of a country to put capital controls in place? What do you gain?
Yes, the interest for a country of putting a capital control in place is to freeze the banking amounts, the banking deposits, to avoid the bank run. Because without these capital controls, maybe the population will want to have his money on the ends rather than on a banking account,
Mm-hmm. So it's really to put a potential banking run out of the picture, so to speak.
Exactly.
Now, how draconian or not would you say that the Greek capital controls are? How tight or how loose are they?
Well, the capital control currently in place in Greece is pretty tight because, the amount of money people can withdraw from its own banking account is very low, only €60, very low. In Cyprus, it was 5 times more.
€300 per day.
€300 per day per person, per account. So the appearance of the capital control in Greece is that it is very tight. But this process begins so late. After most of the population having withdrawn most of their banking accounts. So in practice, now all the cash is, under the beds, and I don't know where in the houses. So now most of the money is no more in the bank.
So billions of euros have already slipped out of the bank, so to speak. The capital controls were put in place too late in Greece.
Exactly. The European Central Bank injected 89 billion of euros in the Greek banks to allow them to face the cash withdrawals. So it's very, very late to put this capital control in place now.
How long do you think that the capital controls will be in place in Greece?
My personal opinion is that this capital control will be cancelled very soon. Normally in the Eurozone it is forbidden to set a capital control because the Eurozone is an area of free circulation of cash. So On an exceptional basis and on a temporary basis, the European Commission and the European Central Bank allowed the Greek authorities to set this capital control. I believe the cash controls, the capital control will not be very efficient. It is not necessary to keep it too long.
What do capital controls mean for the wider economy? How much growth do we lose because of capital controls?
You know, in Greece, the underground economy is huge. My understanding is within this capital control process, the underground economy will increase again. So, of course, when you will look at the Greek GDP, you will see a sort of recession, but it will be an artificial recession. You know, the commercial transaction will be there, but paid by cash, without any record anywhere.
Transactions will take place in the informal economy.
Exactly, without any VAT payment. So it's a sort of worse situation for the Greek treasury, because for them it is very difficult to collect taxes in general and VAT in particular. And in that period of capital control, and even after, because now the cash is where it is, it will be used for future payments, and without any record to the Greek tax authorities. So, you know, the apparent impact will be very important, but in practice, you know, the transactions are continuing.
Christian Jimenez from Diamant Bleu Gestion, thank you very much indeed for taking the time to speak to us.
Thanks to you, Marcus.
We're going to move on now. A debt mountain and a government unable to pay its bills. It might sound like Greece, but there's another debt drama playing out on the other side of the Atlantic. The governor of Puerto Rico says he needs to pull the island out of a death spiral, and he's calling on Washington to help the island out of its mess.
La deuda heredada es tan grande.
The inherited debt is so big that it bars us from accessing the financial markets, and our economy does not generate enough revenue to repay our obligations. According to this report, even if we increase revenues and cut more costs, the magnitude of the problem is such that we would not resolve anything given the weight of the debt that we're dragging.
So Puerto Rico says it can't pay its debts. Is it going to be America's Greece? Stephen Carroll is here now with more on that. Steve.
Marcus, this sounds like a very familiar story. Puerto Rico has a massive debt mountain of $72 billion. That's in US municipal bonds that are used by states and local governments in America to borrow money. The island is a US territory, but not a state, so it's been able to offer investors tax incentives on its bonds. But when you compare the size of the debt to the island's economy, it's much higher than any of the 50 states. So, how did that happen? Well, the island's finances were hard hit by the financial crisis, exacerbating problems of tax evasion, high unemployment as well. There are similar challenges to what Greece faces, but it's also experienced mass emigration, with more than 5% of the island's population leaving in 9 years. To deal with the funding problems and debt repayments, Puerto Rico simply issued more bonds, like using one credit card to pay off another. Take, for example, Puerto Rico's electricity company. It's managed to rack up $9 billion in debt. The island's governor says the debt mountain must be restructured and that the creditors will have to share the sacrifices. Unlike Greece, though, Puerto Rico doesn't have the option of a bailout. Since it's neither a state nor a municipality, it can't get help from either the White House or the IMF. Plus, it can't declare bankruptcy in the way that Detroit did. That, the governor says, leaves no option but for bondholders to take the hit. And that could be bad news for small American investors, many of whom don't even realise the money in their mutual funds is invested in Puerto Rico. Marcus.
All right, thank you very much indeed for that, Stephen. Next up, online streaming is changing the face of the music industry. Eclipsing internet downloads, streaming has turned into the fastest growing way that consumers listen to music. Last year, services like Spotify and Deezer saw subscription revenues grow to $1.6 billion. Electronics giant Apple is now trying to muscle into that market. It's launched its own streaming service, but it's entering a crowded field. Shona Bhattacharya has more.
Apple changed the music market when it launched iTunes at the start of the millennium. Now it's hoping to overhaul the market again with Apple Music. This time, it's late to the game, and it'll have plenty of rivals, including Paris-based Deezer, internet radio Pandora, streaming service Tidal, championed by rapper Jay-Z, and Google Play Music. Sweden's Spotify is seen as the current king of the hill, boasting 20 million paying subscribers. Another 55 million use the company's free service, which is interrupted and financed by advertising. Apple wants to break into the market with a 3-month trial period. It'll then charge users a monthly subscription fee, largely in line with Spotify. The launch is putting the spotlight on how artists get paid from streaming services. Pop singer Taylor Swift publicly criticized Apple for the company's decision not to pay royalties to musicians during the 3-month trial period. When Apple changed its mind, the star agreed to put her music on its service.
I think what we're getting to is a new economic model that really decides what the value of music is. And that's something that Taylor Swift put out there just by addressing the matter in her letter to Apple. And that is something that, yeah, record companies, artists, indie, major, promoters, everyone has been looking at this. How do you make money as a musician these days?
Streaming provides hope for an industry looking to reinvent itself. CD sales have tumbled. Digital downloads that many saw as the replacement model are also seeing falling revenues. Last year, the sales of the global music industry amounted to nearly $15 billion, slightly less than in 2013. At the same time, revenues from subscription services like Spotify soared by 39% to $1.6 billion, and the growth is forecast to continue. Still, analysts warn that the streaming market won't be big enough for everyone. They say some of today's actors will be crowded out. The music industry's upheaval is far from over.
Okay, we're going to press the stop button when it comes to this edition of People and Profit. If you want to get in touch, go to our Facebook page, France 24 Business. You can also tweet me on @MarcusF24. Thank you for watching.